Good morning, everyone. It is Julie here with your Wednesday morning stock market news. We're bringing you everything you need to know as the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. I hope your week is moving along nicely. This morning, we're going to be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. If you enjoyed today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Now let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning ahead of Fed Chairman Jerome Powell, who will be making a testimony in front of the House Financial Services Committee later this morning. Right now, Dow futures are down 0.25%, S&P 500 futures down 0.33%, and NASDAQ futures down 0.44%. There has been a lot going on with Elon Musk's Tesla lately, from charging standard wins to expansion in India, plus one analyst downgrade ahead of their earnings. Texas is going to be the first U.S. state to mandate Tesla's electric vehicle charging standard. This is a huge win for the company as they're working towards making their system the industry standard. Musk also said that he was confident that Tesla will move into India as soon as humanly possible after meeting with India's Prime Minister. He also said he was planning to visit India next year and that he would hopefully be able to announce something in the not-too-distant future. But with all this, Barclays analyst has lowered their rating to a hold on the expectation that shares will cool off from their hot run so far this year. Always a mix amongst analysts, the Tesla stock is currently rated a moderate buy with a split between buys, holds, and sells, and the average price target has a downside of 22%. A South Korean news outlet reported that YouTube will be launching its first official shopping channel for live commerce in the country. The new channel will provide a live commerce platform to companies and intends to live stream shopping content with about 30 brands at the launch. This would be the first time that YouTube is launching an official shopping channel in any country. Analysts currently rate the Google parent company Alphabet a strong buy with an average upside of nearly 7%. In surprising news, Warner Bros. Discovery's HBO Max is reportedly in talks to license some of their HBO Max original shows to their rival Netflix. Such a deal would mark the first time in nearly a decade that HBO shows would exist on a rival streaming video on demand service in the U.S. Deadline reported that HBO veterans pushed back against the plan, but this is a financial move and the corporate financial consideration won out. It is stressed that the deal is not yet closed, but this would mark a major strategy shift. The shows would be distributed on a non-exclusive basis, meaning they would still be streaming on HBO Max. Analysts currently rate the Warner Bros. Discovery stock a strong buy with an average upside of 68%. Eli Lilly has received FDA approval to include children for their diabetes drugs. The U.S. Food and Drug Administration has expanded the label for Jardiance and Synjardy, developed by Eli Lilly and their German partner, allowing their use in children with type 2 diabetes. Previous to this decision, metformin was the only other oral treatment indicated for pediatric patients with this type of diabetes. The Eli Lilly stock is rated a strong buy with an average upside of 2%. Now moving over to notable earnings reports. In the after hours last night, we heard from FedEx. Their stock is falling this morning after a revenue miss plus weak future guidance. Their quarter's results were negatively affected by continued demand weakness and cost inflation. They reported Q4 earnings per share of $4.94, which beat expectations by 7 cents per share, but revenue of $21.9 billion fell 10% year over year, missing expectations by $760 million. Despite the stock falling this morning, analysts are still coming in with some buy ratings today. Overall, the FedEx stock is rated a moderate buy with an average upside of 15%. Also in the red this morning is La-Z-Boy, despite coming out with both an earnings and revenue beat. They said for fiscal 2024, they expect to grow ahead of the industry from this normalized base, with the back half of our fiscal year stronger than the front half, in line with pre-pandemic seasonality trends. Their earnings per share of 99 cents beat by 27 cents per share, and revenue of $561 million beat by over $28 million. Their stock does not have any current analyst ratings. Moving to the pre-market this morning, we heard from Winnebago. Their stock is also in the red this morning after they posted mixed results with plummeting sales. Their revenue of $900 million fell 38% year-over-year during the quarter due to lower unit sales related to the RV retail market conditions. Their Q3 earnings per share of $2.13 did beat expectations by 36 cents per share. The stock is currently rated a moderate buy with a pretty flat price target. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by Patterson Companies after they came out with an earnings beat. Trading under the ticker PDCO, their stock is up nearly 12%. They're followed by Arbor Realty Trust under ABR, up 5.88%, and Exact Sciences Corp under EXAS, up 5.26%. And our biggest losers are led by Akero Therapeutics, though I wasn't able to find any distinct news this morning. Trading under the ticker AKRO, their stock is down about 7.8%. They're followed by Coherent Corp under COHR, down 6.18%, and Federal Realty Investments under FRT, down 5%. So that is going to be everything for Wednesday morning's stock market news. If you made it to the end of today's video, make sure you say good morning in the comments down below. I always love hearing from you guys. Thanks so much for watching. Have a great hump day, and I'll see you back here next time.